Good evening. This is Ryan Mallory for SharePlanner.com. Today is February 3rd, 2011. It's been probably like a week or two since I've done a genuine market wrap up video for you guys, so I wanted to take this evening to do that and just give you some thoughts on what I'm seeing in this market, um, what I think that we'll see in the days ahead, my thoughts on the unemployment number. A lot of this stuff is pretty tricky. The market has a lot of the topping features that we saw from back in April. What I'll do here is I'll zoom in on the market action of late, this nice strong rally that we've seen here. Um, and then just this market action here, I'll draw a circle around it so you know exactly what I'm talking about. This market action right here, okay? And let's take that and compare it to what we saw back in April of this time as well. So you see a similar march up in price that seemed like it would never die off. And then you get this morning star or this evening star formation candle pattern. And you have that similarly here. You have the nice strong march up, and then you have a evening star pattern that sees a decent amount of selling in just a 1 day period like you had here. Then you have the bounce off the 20-day moving average. Bounce off of the 20-day moving average, okay? Similarities abound, okay? Then you have another run up to new highs and then another sell off. So we're pretty much on track. The only thing that didn't happen today was the sell off. We got it early this morning, but it didn't follow through. It bounced off the 10-day moving average. That does confuse me a little bit because it's not so much that I plan on it following lockstep of what we saw in April, but the patterns are very, very similar. And I'm surprised that we did get a sell off back in last Friday, okay? But I think we should be seeing a little bit more selling pressures than what we're seeing right now. We continue to break into new highs. We reclaim the 1300 level. You look at April action from what we saw. We had the two big sell-offs here, followed by a 2-day rally that saw another big sell-off. That's what I thought we should have seen right here today. We didn't get that. However, it's not required to follow it lockstep, but I think there's a lot of similarities to what we're seeing right now in the market and then what we're seeing in the market from back in April, May time period. So I do think that there is a genuine concern that we'll sell off here. And there is a catalyst for that tomorrow, and that's the unemployment number. Now, with the unemployment number, what concerns me is that the bulls look at it positive either way. If there's a huge beat on the number, well, that speaks for itself. Unemployment's decreasing, the number of jobs are increasing. But if we don't get that, let's say we get a shock tomorrow. Let's say unemployment rises to 10.2% or 10.3%. I think it's right now at 9.8. But let's just say it jumps up dramatically tomorrow. Well, you would logically expect for there to be a significant sell-off. But the bulls, I've seen this in a number of employment and jobless claims when we have a huge miss. They actually almost justify it. Well, now the Fed's going to do QE3 and they rally off of that. So it's good news, bad news. It doesn't matter. And that is typical in a good market to see that. The good news rallied on, the bad news ignored or even rallied on. Tomorrow, if we get bad news, it'll be interesting to see if the news sort of creates a panic attack like what we saw back on Friday when the market sold off the Egyptian riots, and that's still in the background too. You can see these riots spread into Jordan, Yemen, Syria. I mean, there's a lot of things that could happen. And if you remember about 3 or 4 years ago, there was a lot of uncertainty in the markets due to the conflicts between Israel and Palestine. And Israel is very much in the picture here, folks, because Egypt and Israel have a peace agreement that's been in place for decades now. And if you have the current government regime get overthrown and some radical Islamic regime put in its place, then there's no doubt that peace treaty, and Israel's only ally is now its enemy. So those are things you got to consider, things you got to think about. Um, the events in the Middle East affects the price of oil. It affects the stability of the Middle East, and if the stability goes up in flames, I mean, there's a lot of problems there that will hit the U.S. markets. So the other aspect of the from the technical perspective that I wanted to focus on is the Bollinger Bands. I know I harp on this stuff a lot, but I mean it's worth mentioning. I thought today we'd see a significant sell-off. Today we did not get that. We got it back here where we sold off, and we've seen it again here where we get outside the Bollinger Band and sell off. And I mean, it just happens all over the place. Once again here. So I would say the last 6 times we've seen a wave of selling that came on. So if we don't get that here, it would be a break of the trend that has happened in times past. So I still think that tomorrow, especially with the unemployment number coming out, it's really the most important news report, or the economic news report, that we can get throughout the entire month. I mean, GDP is very important as well, but I would say right now, with the focus beyond jobs and growth in the economy, the employment number trumps everything else. So we're right up against this Bollinger Band here. I think the likelihood of us moving much further beyond that is very limited. So you have to ask yourself, I mean, are we really going to see a push beyond 1310? There's some resistance on the S&P going back to 1313, and where I draw that from is looking at the weekly chart. You have some resistance right here at 1313. This area right here, that's the next logical resistance level. I am not overly confident that we will break through that tomorrow, even on a stellar unemployment number. And so, with us up against the Bollinger Band, up against I guess you could say a minor price resistance level, I think that if we do blow it out, I think there's a strong opportunity for there to be a sell the news event as well. So I'm trying to lay out all of the different scenarios that could play out tomorrow. And the reason why I'm short is because I think that there will be a sell the news effect. I think that the market is overextended. It's very similar to what we were seeing back in April when we saw a significant sell-off, and consequently, it tells me to have a leaning more towards the short side than the long side right now. All right, and that's going to do it for now. I hope that you guys have a little bit of better understanding from where my approach is with the market, and that it can help you at least define your perspective on the market as well.